We are still in a bear market for all U.S. indexes. In those conditions, it's very important that we're maximizing both long and short side trades today. We're going to focus today on short trading in a bear market, guys. How do we not only take advantage of overall momentum in the market moving to the downside, but how can we maximize those profits when it is?
Yeah, so the first things first, I think one of the best things in a bear market, if you're going to be shorting, is when you break a floor, right? Like what'll happen is you'll get, look, in a strong market, you go upside and then it's just booming, breaking through resistance. Now, I'm going to show you one that hasn't happened, but this is the one I'm looking at in this bear market. It happens to be Micron. So you look for these monster levels where you might have had previous support. And look, we can talk about resistance and shorting in front of it. We do this all the time, but I like these a lot better. Because you look at this 66 on Micron, and it got back there in October last year, and then retested the high, right? Like it got there and ran away from it. I'm not talking pulling back to the 200 period moving average. I'm not talking pulling back to the lower high. Like it went all the way to the top off that bottom. And then now 1, 2, 3 times we've tested off of it without breaking out of the bottom end of the range. So could it break the top in the next few days and then we're up at 86 and I'm not thinking about this anymore? Fine. But once it gets below this, there's air below. I mean, it's just, the gap is gigantic, and we've seen this work time and time again in the bear market. You allow it to trade below. Sometimes it gaps down and you don't get the trade. Other times, you'll get it dragged down intraday, and you can just simply take a break of the level, or at the open, it'll fail that price, and you can be short below it. These are the opportunities that you want, and ultimately, they're easier to spot. However, unlike every single day, you'll probably, on an up day, you'll find resistance that you want to be short in front of. These ones you have to be patient for. You've got to set your alert. It's like if Micron gets below 67, I know it's close enough to it, an alert pops up, and I'm watching Microsoft. And maybe it breaks, maybe it doesn't. But when it does, I'm going to be there because that's the kind of thing that I like looking for. They're the bigger opportunities that are for you out there when these floors break, because there's a lot of stops at a level like that, trust me.
Yeah, no, I mean, that's, breaking floors is definitely a great idea, as well as what I think is very, very common here. You're going to hear the terminology a lot, and it's just a bull trap. Like, you're going to get days where the market just goes for a run, right? It's like a bear market run back up to the upside, just where there's some relief getting taken off of the market itself, and you can find that in many individual names. I'm just going to use the NASDAQ 100 here, and unfortunately the Qs, I don't know what's going on with the chart here, but it's only loading back to December, which is fine. If you just said at the beginning of the year we're going to start to enter a bear market, I mean, I think we entered it around here-ish, late April maybe, where the NASDAQ finally went down that 20%. So what I'm saying is that you're going to get these big moves down, but then when you zoom in, like, there are opportunities here. Like, this is how to maximize profits in a bear market, right? That's what we're talking about. So here you go. Like, this NASDAQ falls from 370 almost in a straight line all the way down right here to 311. Like that right there, 370 down to 311, that's $60 taken out right there. That's almost 20%, right? But then look what happens. Then you get a nice bump up here from 312 up to 330. This is 3 days of nice upside moves. You could just start building your short. You believe it's a bear market. It is a bear market. Wait for these up days. You get another one here. Boom, right up to the update. This just happened. Goes right back up. And again, as long as you're not breaking the momentum to the upside again, right? So here comes a move back in, there's the move up, but you gotta find some levels. So just like we do it here on a daily chart, it doesn't take out this last little bump here, right? So it doesn't take that out. So what you can do is absorb this. There's the move. If you're wrong, you could get out right here at 335, right? It's the bottom, it's the floor that it already broke. So sort of cherry picking on Neal's, there's the bottom breaking. So that's the short. But then if you're taking this bull trap, then you can take this short against that same level, right? It works again right there. And right here it works again because here is the other bottom. So this is one group right here. I mean, this ellipse, I don't know if it's going to work. Let's see that. Let's see if this works. So here's one level there, and here's the other level there, and both times we didn't get back above, so you're short on this bull move upside has worked. So if you short it again right here, then you get that big move down. That's a 305 tick. It went down as low as 280 right there. So that's another almost 10% down one more time in the market. So it's about 7 or 8%. So, and you might be having one again today. If you use today's little move there as a bull trap to the upside, well, you could see go short at the top. And even if you wanted to get real conservative, maybe you use that level right there, 308 or so on the Qs, right? But that's just another one. So find these levels where you're saying to yourself, hey, we need to take this out for me to be wrong. We need to take that out for me to be wrong. Now we're into this level. So if you play that, you're in a brand new level. If you go back above, then you can get out. Maybe it's a reversal, right? There's also the 50 period that you can kind of watch. That's another indicator for me on a daily chart. If there's a 50 period moving average, you want to make sure you break that to change direction. And look, we haven't broken that. We broke it once in March. That was a beautiful move back to the upside. But since then, it's kind of downward moves here on the Qs.
Make sure you're capitalizing on the downward momentum days, but in the same sense, when the overall market does bounce, be aware, it's going to be violent. So you have to get out of the way in a hurry. Guys, great tips there on how to short in a bear market.